Good morning, everybody. This is Jack Gleason with Startuptrading.com, and to begin this morning, we will go over the news events and then follow that up with some technical analysis on some currency and futures markets. It is Monday, June 29th, 2020. This morning at 8:30, an hour before the bell, we had Canadian dollar building permits and the RMPI reports. At 10 a.m. we're going to have pending home sales for the U.S. markets, and then this evening we're going to have manufacturing PMI at 9 p.m. East Coast time out of the Chinese market. So that actually might be a market mover in the after hours, at least for a little bit. Tomorrow, 8:30, Canadian GDP, and then Fed Chair Powell will be testifying. As a reminder, this is a shortened week. Friday, the markets are closed for the 4th of July. So I do want to actually start off the day here with the euro, which I don't often do, and just talk about a couple of different support or resistance levels. But so far in the overnight session, we are on my leg start indicator on the hourly chart, green, and we made a double bottom on what was Friday morning, and we have rallied out of that double bottom. There was a 50% retracement long, and then we had our next traditional trade, 2 profit targets. Going into this morning, there will be the third traditional trend at the 112.63s. But I want to talk about a couple of other levels coming into play this week. Now, if I go to a daily chart, there is a swing mark high, or a leg start high at this 113.24. So you see that's a leg start. Couple of candle closes up to there. So in between that level, and then I'll go to a 4-hour chart, and you can see that there's a leg start on the 4-hour chart right here at the 113.15. So this is about a 10 pip zone that I do expect to act as resistance that lines up with a third touch of a trend line. So you have the beginning, the second touch, or that actually defines the trend line, and then what would be the third touch. So we'll see if we'll get up to that zone, potential sell zone here today. If we do rotate to the bottom of the range, I would expect a full 50% retracement from Thursday's low to high as well, and that lines up with the area we broke out of. So the aggressive continuation here this morning in the euro is from the 112.63 support level. However, higher time frame zones exist at 112.38 below, and then above we have the 113.15 to the 113.24 resistance. So I'm just going to have some alerts set on both that. I would really like to see this support level trade if it possibly could. So that I just wanted to go over that this morning, a little change of pace instead of just going over the S&P 500 every time first thing in the morning. So we will now go over the indexes. I'll begin with the ES to just talk about the higher time frame here. Now, the S&P 500 broke down out of what was its 5-day consolidation last Wednesday. And after we break down into consolidation, we typically run into what is a full 50% retracement short. And that's exactly what we did. Textbook 50% retracement short off the early hours on Friday in the after hours, and we broke through those lows. We were holding extensions all day long. One of the resistance levels I want to pay attention to here today is the 30.3275, which is the full 50% retracement short from what is Friday's high to low. Now we'll go to the 5-minute smaller time frame here and just talk about the sequences, but we initially had extension or a halfway back short right off the morning, and that halfway back short blew through targets. We then went into an extension. We had a same anchor to the new low that completed towards the end of the day, and then that same anchor new low here has technically traded, and then just pierced. So at this point in time, what I'm looking for is just an early morning consolidation between what is the basically Friday's low area right around 3,000, and then the overnight high is 30.21. I think we're going to be a little range bound. I'm not looking to take any action until we run into the 30.32s right now. My bias is still lower, especially below the 30.44s. My bias is definitely short here. As if we were to get a support level to trade, I would like to see us rotate down to 29.65. I'm going to go to a daily chart. This 29.65 is the previous high we broke out of from April 30th. So that's the April 30th breakout. We haven't closed below there since we broke above. And what that would be is that would be a completion of this untested level. So between 2069 to 2969 to 2960 is where I would see, if we did trade lower, a potential reversal to play out here for the S&P 500. Moving on to the Dow, which has come closest to its full 50% retracement. Now, the Dow also had that halfway back set up Thursday, Friday, and then we came really close to completing profit targets on the Sunday night open. The Sunday night open, the low was 24,743 with the target at 24,698. So 50 points, which isn't much when the hourly ATR is 122 points. The full 50% retracement from Thursday's high to low has been acting as an overnight resistance level. And you can just see, if you look at what was the previous low that we broke down, so last Sunday's low right here, this level, what is it, 1,000 or 25,320. I'm just going to go ahead and change the color of this to purple, but that low held for, many days, and then we broke below it on Friday. So this zone up here is going to be resistance probably all week until it breaks. And you can see so far it's been front run in this bearish bias, but the untested 50% retracement short is 25,201. 25,201. So if we do get a move lower here, what this target's going to be down here at 24,527 is that's going to line up with a retest of what is the daily extension that has not yet traded during the regular trading hours, traded down during the overnight session last Sunday on the 15th. And a retest of that level here would definitely be a support zone I'd be interested in, 24,527 to 24,499. So this zone here in the Dow, we're going to be watching all week long. So I'm going to go just move that little support zone over, create an alert, add or below, boom, boom, boom. All right. Moving on to the NASDAQ, which is actually in the most aggressive short sequence out of the three indexes that we're watching. It's in a more aggressive sequence than the Dow. It's in a more aggressive sequence than the ES. Why is that? Well, what we are holding is an extension. You can see the full 50% retracement short from Tuesday's high to what was at the time Thursday's low has actually completed its short profit target. The ES and the YM did come short, or did not yet complete their negative 23. I do believe they will here today, just to need a little bit of a push through the lows, but that profit target completed, and it was basically the low of the Sunday night. Now, there was an intraday extension series that has been trading from 10,063 anchor to low. That completed also, and the same anchor new low has a stick of the 38% retracement. So we are bearish below a 99.54 here, and really if we retested this 50 up here at 99.21, I would expect that to be a resistance level on a first test as well. So right now, as long as we stay below those levels and the bias remains bearish, we have downside targets at 97.13 in the morning low. I believe in the NASDAQ was a profit target, so there's very well the possibility that we rally off those profit targets again. Actually, you know what? No, that was the Thursday overnight low. So we'll see what happens when we get down to those 97.13s. But there is a bearish bias here in the NASDAQ below the 99.54 zone. Moving on to oil. Also, they're all of these indexes are kind of moving together. We have a 50% retracement short from the highs of last week to the low. Now that traded literally to the tick, and we just rolled over Friday with the indexes. Now, if we got a second test there, I would still respect that as a resistance zone. It's a pretty heavy resistance zone. We definitely have some momentum up from the overnight session. There is an extension that's traded, not something I'm looking for, but this target would be right at that resistance. So if we get back up to the 39.36, I don't think we're going to spend much time above there right now. I also want to pay attention to this hourly leg start right here, because that's going to line up with that negative 61. So if we do somehow push through the highs and just get a short squeeze through the highs, I would be looking at the 39.76 to the 39.83 resistance above, just to fade back to the bottom of the range. All right. Moving on to the USDJPY, which has come into a full 50% retracement long. Now, we had a halfway back long on Friday that was a perfect front run of 4 pips. When you get a big halfway back long in the currencies, that's a perfect front run of 4 pips. It usually means the trend is set in that direction, especially if you have a great reaction. Now, we did have a great reaction. We tested this 50% retracement. First, it was front run going into the end of the day, and then in the overnight session and starting at the 2 a.m. European Open, we caught a bid from the 107.07 level. That upside target is at 107.48, but the higher time frame target that is really from the halfway back that traded on Friday is going to be all the way up at 107.77. And then let's just take a look at this daily chart. We are all the way at the bottom of the range. If we start cruising through that 107.77, we can start moving really aggressively up towards, possibly all the way back to the highs that we saw in June. So definitely watch the USDJPY here. This is a very bullish pattern, and as long as it continues to stay bid in aggressive series, this thing could move much higher. Moving on to the Aussie dollar. Now this is interesting setup for me. So we had what was a rotation out of the highs, and we never quite got this full 50% retracement. You can make an argument for a more aggressive series, but what I'm looking at, just because there's been a perfect reaction, is we actually reacted to the 38.2 here. That's not something I typically would trade a 38.2 of a traditional. There's also the possibility that we have an extension from 69.34 to low. This has also had a reaction, but either way, we have a downside target of 68.26, and there really isn't much to do unless we complete that target on the higher time frame. There's a 50% retracement short that was a little sloppy here today. You could continue to look at that, but I wouldn't be too aggressive here in this Aussie dollar. Ideally, if we rotated higher, I'd look at the 50% retracement short at 69.07s. But other than that, I'm just looking for a completion of the lower side of the range to trigger my next setup. Moving on. Oh, that's euro. We already did that. The pound, very aggressive sequence down, coming out of what was a larger, higher time frame 50% retracement short, which traded on Tuesday. We got above those levels and then back below them on Wednesday, and then we began a series of shorts. Our next measured move is from the high of Thursday to low. We traded it perfectly in the overnight session at the 123.88. And one of the things you can see is, why did it trade so perfectly? Lined up with just natural resistance. We have that previous swing low. You see that little dot from the swing mark code, from the startup trading swing mark code. Some lows we broke down and out of, lines up with the 50%. We trade it, tag it, move lower. Downside target is at 122.77, and there's probably a 5-minute series you can find in there, but there's 2 higher time frame downside targets here, 122.51 and 122.78 here going into the beginning of the day. Moving on to the USDCAD. Check out this daily chart, guys. We had a breakout here of a multi-day consolidation on Friday, okay? And we are holding above that previous resistance zone, and as long as we continue to hold these lows that we've stuck here, we could begin rotating up to what I have is the 137.73 daily profit target. There's also a trend line here that literally tagged to the tick. A break above this trend line. Let me show you what that trend line's from. It's on the daily chart, but it's swing low, swing low, swing high, swing high. If we can crack that trend line, that's also going to break what, kind of you could argue is like a head and shoulders pattern. But that's going to lead to the completion possibly of this higher time frame target at the 137.73, which is about 100 and some pips above where we are currently trading. And then moving on to gold. Now, gold had a daily retest of the previous high. Now, the previous high was from June 11th. We tagged that level. It wasn't really a setup I was looking for, but I did have this support zone on my chart, and that is a very aggressive retest. Now, as soon as we traded that retest, there was just a bid straight up. I mean, look at how many green bars we had in a row. It was 1, 2, 3, 4, 5, 6. There was like one red bar and like 20 green bars. And we went straight up. And the extension I was looking for on Friday was from the 1765 to high. Now, we traded that in a front run and have retested here. It's a little, I'm a little cautious. If you don't have an entry at the extension, there really isn't much to do right now. The full 50% retracement from what is Friday's low to high is 1772, and that's below us. I'd be more interested in participating in that just because, you know, this is already traded twice here, but if we complete, we'll have a same anchor new high. So it's about being patient. And then silver has traded a 50% retracement from Friday's low to high, but once again, that I want to see that confirm because we're really at this top side of the range. We've had a hard time breaking and staying above 1820s. So if we break and stay above 1820s, I'll begin to be a little more aggressive with my sequences. But right now, I am looking for the full 50% retracement either from two levels. One, the lows of June, which is the 15th, and that's at 1765. So that's quite a bit of ways away, and we would need to take out Friday's low in order to do that. And then the other possibility is just taking last week's lows to highs, and that is in 1785 half. It is lines up more with what's been closer to the relative range. So obviously there's a higher probability that that support level will trade as opposed to the higher time frame. So that 1785 half is going to be something you're going to want to pay attention to for silver. And then the VIX, I'm just going to continue to watch this 32.75 support level. It was the 50% retracement long that broke into the close on Thursday, but let's watch its upside target as well, 36.66. If we do complete that upside target at any point this week in the VIX, I would expect a reversal. The indexes would be falling if the VIX was completing that 36.66, and if we complete 36.66 in the VIX, I would expect the ES to begin a short covering rally. But that's going to wrap up my morning trade plan. If you enjoyed this content, please give this video a thumbs up. Feel free to share it with anybody who you might think will find it useful. If you're interested in checking out the Startup Trading Trade Room, click the link below. And I'll see you guys in there. It's an awesome room. I'll share my levels with everybody here in the trade room. Take care, enjoy your day, and trade safe. Yes, to begin a short covering rally. That's going to wrap up my morning trade plan. If you enjoyed this content, please give this video a thumbs up. Feel free to share it with anybody who you might think will find it useful. If you're interested in checking out the Startup Trading Trade Room, click the link below. And I'll see you guys in there. It's an awesome room. I'll share my levels with everybody here in the trade room. Take care, enjoy your day, and trade safe.